Alright, our two strategies today is very simple. Okay, we're going to talk about tails predominantly. I like tails. I'm going to show you what tails look like, what an example of a tail will look like, as well as a potential strategy using a tail today. We're then also going to talk about a little bit of an engulfing profile and value areas. I'm going to show you what a good one looks like and what a bad one looks like so that you get an idea of the two variations and potential end outcomes. Okay, so straight into it. We're going to start off and talk a little bit about the DAX from yesterday. So I'm just going to bring this up top here. Okay, so what we've got effectively in the DAX is we have got a market that exhibits some tails. Okay, so we can see that nice little fat S tail at the top there. Okay, now tails on their own show us a very strong auctioning process, and that's why we pay attention to them. Okay, when you get strong auctioning process, it is giving you a good understanding of the interaction at a price point in the market, and it's that interaction that gives us sort of information about potential future moves. Okay, so when you see these sorts of large-scale tails, you always want to sort of pay attention to it, okay, because it's telling you about the response that occurred once that DAX popped up to that 12 or that 340 level yesterday afternoon. Now, the important thing is, one, observing the tail, but then in your debrief, you want to go and work out, what was the implication of such a large-scale tail. Now, what I really like about this tail was it occurred after a breakout of 2 hours of consolidation trade. Okay, so if you were looking at this on a 1 minute, a 5 minute, a 30 minute, whatever it may have been, you would have seen a lot of consolidation in the DAX. And once we took that out, we took out some stops, but we equally reversed very, very aggressively back into that consolidation. Okay, now, the first thing to note is the tail. Okay, you've got the tail. Once it confirms the close, you then want to assess, okay, what the probability is for a move in the opposite direction. Okay, now one of the factors I like to look at is obviously the longer the tail, okay, the more aggressive I would expect the reversal in the opposite direction. Okay, so the length of the tail for me is quite crucial in determining the speed and volatility in the opposite direction. Okay, so what we can see is, this S tail, once that T print came in, it barely managed to get out of that previous consolidation area before then not only taking out, that S TPO low, but then also, continuing a little bit later on in the session. So what we were looking for was short side trades. Again, in terms of a stop, you don't necessarily need a stop at the high. The important thing to understand about a tail is that, one, obviously it shows the auction process, but two, if we were to take out the top of that tail, okay, you're going to see an unwind of the positions that would have entered short. So that's crucial to understand. You don't need to stop all the way at the high. You can actually sometimes leave your stop, just below that high, so that you don't get any kind of slippage on the or in the event of a stop up. Okay, so that's the first thing to understand. Now, in terms of entry, a lot of traders or a lot of algorithms would actually enter on the break of that S-print low. For me, I don't think that's good enough. I think to reduce risk, I almost want to preempt. So once I see the close of the tail, any kind of a bid up into that tail, I'm willing to preempt. And the reason is simple. If I'm preempting and selling into an up move, I'm reducing my risk ultimately. Okay, yes, I'm foregoing, the fact that obviously I'm getting less information. In other words, I'm preempting, so I've got less factual observation. But at the end of the day, for me, the risk reward makes sense to take the preempt because I'm reducing my risk and ultimately increasing my target. So I'm foregoing potential information for potential bigger profits. Okay, so obviously you can enter on the break of that S-print low. You see you get paid quite handsomely for it, and then continuation lower on the day. Okay, so that's the first thing to observe, is how a tail works. Now, I want to show you how it looks when a tail gets taken out. Okay, so note the X print. You can see we had a nice little tail, and note this is called a hidden tail. Why? Because it's within the day's profile, so you wouldn't necessarily see it if you had a closed profile. However, this is a hidden profile tail, and we can see that obviously, again, note how the market spent an inside candle the next candle. It then took it up, but there was no volume and volatility. Okay, so again, we flag the tail, but once we took out the tail, notice the volatility toward the downside. Okay, and this is the second key factor of a tail. There does tend to be a certain amount of positioning and follow through once we take out a tail, and we can see that toward the downside. So those are the two key elements of a tail. It gives us a little bit of a bias in one direction once it closes, but then it also gives us the knowledge and understanding that there's likely to be some positioning, in once we scale through that tail. Now, what I want to talk about in terms of strategy today is I actually want to show you the potential for another tail. So what I want to do is I just want to bring up a slightly different chart, and I'm going to show you the German Bund 10-year. Okay, so what we can see, again, notice the market's opened out of balance. We've got a very, very large K-tail, okay, almost looks a little bit like an open drive, and we can see that the market is driven straight out of the previous day's high. So we acknowledge that tail, we accept that tail, and we're looking to be a buyer so long as that tail holds. Now, a couple of interesting facts, obviously, 162.11 was yesterday's high, well, pretty much one tick above yesterday's high, but it's also last week's value area high. So we're going to keep an eye on that 162.11 for a number of reasons, which is it coincides yesterday's high, but it also sort of protects that tail. So we're looking for, again, preemptive longs. Note, we don't need to stop out below the low, okay? Equally, we know if we take out those 95s, we're likely to see a stop down towards the downside. So that's what we're looking for in terms of this Bund. Once that cash market opens, we are looking for continuation in the direction of the K-tail.